Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Well, let's take a look at some of the stocks on the move today in Europe. I'm Stephen Carroll and I'm joined by Bloomberg's Chloe Mele for more. Chloe, good morning. Let's start in the UK, and the retailer Next has some thank you letters to be writing. Why?
Yeah, absolutely. Well, to Santa in particular. So Next boosted its profit target for a fifth time this financial year, and that was thanks to really strong sales over the Christmas period. So the sales were super strong in international markets in particular, but even in the UK, where expectations were a little bit more muted, growth was actually ahead of those estimates as well. But it's not because the Christmas period was strong that 2026 will necessarily be golden either. So Next did warn that profit and sales would grow at a slower pace in the year ahead. It blamed rising unemployment and slowing wage growth, which means, of course, that there will be more constrained consumer spending, more uncertainty, less money to splurge on nice clothes. And Next is usually quite cautious with its guidance, and so the fact that it had this word of caution wasn't necessarily taken like a real warning from the market, and the shares did still rise. But it's worth keeping in mind that there are still challenges for Next and for other peers within that British retail sector, and there will be more details on that when we get some of the food retailers reporting some Christmas trading updates as well later this week. We've got Tesco and Sainsbury's as well as M&S keeping us updated later this week, so we'll see what's happened there as well.
Okay, so more to watch for on the UK consumer front. Ocado, meanwhile, delivering fresh gains. This is after the latest report by analysts at JPMorgan. What have they said?
Yeah, it's a good day for Ocado. They were placed on a positive catalyst watch by JPMorgan. There was also a monthly report from an industry researcher that showed that Ocado was once again the UK's fastest growing grocer in December. So there's kind of two positive things there for Ocado. If we go back to the positive catalyst watch from JPMorgan, they said that there is now greater operational stability at the company after some recent setbacks. Of course, we remember the biggest one was when Ocado's biggest customer, Kroger, announced it would close 3 automated warehouses that were operated by Ocado, and that had sent the shares plunging and really hurt investor confidence in the company. But now there is a lot more clarity on that partnership with Kroger. There is also Ocado going to be pursuing more deals in more markets after ending some exclusivity agreements. And JPMorgan analysts also said that the balance sheet looks much sturdier, much stronger. So all of that means that perhaps Ocado will be back on track in 2026. So we'll be looking for that as well going forward.
Okay, let's turn next to Microchip. Got some traders watching Europe tech firms for non-micro gains.
Yeah, so Microchip over in the US has said that it expects higher sales than previously thought. So that's taken by the market as a sign of recovery for industrial and automotive end markets. So this is a good day then for semiconductor companies in Europe that are exposed in particular to those end markets. So we're talking about Infineon and STMicro. We've, of course, talked a lot about semiconductor companies and their exposure to AI and how much they benefit from that. But there's a lot of other sectors that need chips, including cars and factories for a lot of other things. And there's been a lot of weakness recently in those end markets and really a lot of uncertainty about when that would lift. So the fact that Microchip has signaled a rebound there is really reassuring for Infineon and STMicro, especially given that those two actually had said previously that the quarter that ended in December would be below seasonal trends. So they might actually be doing better than they expected. There's still a gap in stock performance between those names and then the names that are a little bit more exposed to AI in that semiconductor sector. So let's see if that recovery in those end markets brings that gap, closes that gap a little bit more.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.